Hello, folks. Brendan Chapman with you today for another TheoTRADE video for December 30th, 2024. One more trading day left before the new year, going over the turn from 2024 to 2025. And so far this year, it has been a year without Santa. The question is, what the technicals say about a near-term bottom in the S&P 500, and that's what we're going to talk about today. So as we look at it, we can see over the period between, Christmas and New Year's, so far, what have we really seen? Again, we peaked on Christmas Eve, and there were several indications on the 24th. We'd reached a near-term high from a volatility standpoint, and we're going to flip those around to see if we're near a low today. And that does extend into the first couple of trading days of 2024. Some people kind of extended all the way out to the beginning of December, which if we go back to December 2nd, by any measure, Santa Claus has failed to come this year with only a handful of days remaining before we kind of finish this Santa Claus rally period. And so again, what does the market have in store? Well, if we look at the ES, again, we can see that as we transition, we opened, we sold, we traded much lower. The market's still open. We still got about 15 minutes left. We've kind of come off our lows. We're sitting in the middle of the range. Earlier in the day, as we were kind of talking during my session, it's going to form a hammer. Well, there's a lot of stuff that's got to happen for this thing to really finish up here near the high. You can see we really started to see some selling overnight. We've rallied back, and now we're consolidating, wondering what's going to happen. Maybe this 15 minutes could end up in furious selling. Maybe it goes out in a whimper. We've got a full trading session tomorrow. But again, probably not going to see as much volume or activity. So we'll see where the market can head. Well, as we look at the S&P 500, let's turn our attention to the SPX. We'll just look at the index here. But what's the prospect of a bottom here? A lot of people just yell bull market in a crowded building and say it's time to buy, right? We look at SPX, we're kind of sitting near the open as far as the cash open here, roughly. But what damage has been done? And we can notice that the highs and lows have been converging. We had a very significant breakout on the 18th. We've now come back. We retested the breakout level. We're rolling over again. So yeah, we're coming off the lows today, but is this really a significant indication we're about to take off? Again, those people that just say, well, we're in a bull market. Well, what is a bull market? What is a bear market? How do they even define it? If you're going by the 20% rule, up 20%, down 20%, are you really going to hang around for us to drop 20% before you start to take profits and maybe hedge? So again, I went over back here on December 2nd, how to hedge a long stock portfolio, anticipating a 5 to 10% correction at some point in the next several weeks. Well, we got a 5% from the high. Then we got the same indication on Christmas Eve. Well, what indicator am I looking at? I'm looking at volatility, the VIX specifically, and beyond that, we're looking at the 3-month VIX related to the 1-month VIX. And what happened was on Christmas Eve, the 3-month VIX got 20% higher than the 30-day VIX. What does that tell you? We're about to expect some volatility in the coming month. Could happen in the coming days. Sometimes it takes closer to a month. Sometimes it doesn't come at all, but it's a fairly accurate indicator of a time to look to take profits and consider hedging. We had the same signal back on November 29th as we closed above here. That was not a bad time to take some profits and hedge downside risk. Well, conversely, what did we see? Well, on the 18th down here, on the big selling day, when the VIX spiked to 28, guess what? We had the opposite. The 3-month VIX dropped below the 30-day VIX. This was an indication to look to start to buy. We'd reached a near-term extreme in the VIX, and we're looking for the VIX to get crushed. Well, guess what? The VIX did get crushed. The VIX got crushed so much that the 3-month VIX rose very, very quickly over a handful of trading days back above 1.2, meaning that the 3-month VIX on the 24th with that rally, you may have thought, oh, this is a bull market, right? We're off to the races again. Were you looking at this with a degree of skepticism on the 24th, or were you thinking that we're now going to 7,000? The volatility markets told you better be careful because we're pricing in a volatility event, a 5 to 10% correction in the coming weeks. And guess what happened? We peaked the next trading day and we sold off the last couple of sessions here. How much more downside remains? Well, again, the same thing that we looked at going back to the 18th was this was below 1. Well, guess what? We're not there yet. The VIX is not being sold. The VIX has not risen enough. The VIX has got to shoot up. We've got to see some degree of selling, some degree of capitulation. And what I shared today is that right now, again, the 3-month VIX is 10% higher than the VIX. Does that mean the market can't go higher? Of course it can. It can go higher, right? The probabilities and the risk favors what? More downside potential here. So you got to be careful at this stage. We're not seeing the exact same signal we got on the 18th that led to the low on the 20th. This time it is different. And skew's not come off. Skew says there's still a very high degree of hedging right now. Okay, maybe skew drops today as the VIX has risen just a little bit. But just to show, we probably need to see a VIX north of 22 to really mark and say, okay, now we've reached a point where the sellers have come in. We're bidding some vol here, buying puts on the VIX or buying puts on the SPX. Now we might be at a bottom. So everything right now suggests what? 5 to 10% immediate downside. The rising wedge is signaling maybe 5,200-ish, 5,100 down here. And again, we're hoping that this time it's different. The question, is it? Okay? The technicals say there's nothing that gives you a strong indication that the probabilities we move up in the near term. Again, we can bleed higher, retest the prior high, and then break down early next year. But the chance of getting a real strong rally going into the end of the week and fulfilling this kind of Santa Claus rally period just does not look very promising. And this is a problem if you're stepping in and wanting to catch the falling knife here. Earlier today, I was asking, okay, what about SPY? Oh, let's look at SPY. So we're looking at SPY at that time. And everyone thought, oh, I'm bullish because, oh, it looks like we might be forming a hammer. The reality is, if we're trying to find a near-term bottom into a selling phase, these are not the kind of days that are encouraging. These are the days where we failed to find sellers, right? And what we're trying to find that point of exhaustion where the sellers are in and they've sold, they're buying puts to protect their portfolios, and we see the VIX spike, we see the market, what's called capitulation. The VIX going to 28, that's a sign of capitulation. The S&P down 3%, that's a sign of capitulation. Going out in a whimper, we're not even down 1% right now. That is not capitulation. Energy, however, the one area that I am looking more constructively on going into early next year is up a little bit. Gold is down about 0.25%. So if I sort this by performance, gold's right in there with XLU. I'm expecting bonds next year to rally. Early next year, we'll see if we can get it. That'll help gold and utilities. I'm encouraged to see that they're outperforming today. And gold is outperforming the S&P 500. Maybe gold is about to put in a low here. But the market generally, are we really looking at the possibility we could get a strong rally and get back into positive territory during this Santa Claus rally period, getting back and surpassing the Christmas Eve high or even the December high, the December 2nd high? Okay? Really, really hard at this point in time. Now, today, there were two significant prints that happened today. Going up to the trade flash, you'll see a large equity trades, two of them, 2.5 million shares in one trade for 591.27. That's the high here, the yellow print, the yellow line right here. Okay. The second was 3.3 million shares at 587.50. Don't worry about sell or buy. All we worry about is what? We just worry about the levels. Market on close prints, not a big deal. They're not relevant in terms of like sentiment, levels, etc. So the point is, we have a level here and a level here. Right now, we're stuck in between. And that's actually a good thing, because if we're looking for a rally, we probably need to take that out and see the market begin to move. And maybe, just maybe, we may get back to the 24th again. Probably not by the end of the week, but who knows? We start to take out the low here at 587.50, and now what's happening? We're reaching for lower lows. And so while the market right now, the vol markets are not signaling we're at a low right now, what would constitute a low? Well, number one, we look at the S&P 500, we're only down $4.66. We got to see something here. We got to see at least a 1 ATR down move. What would that take? It's going to take about $6.83 today down for us to really mark a level of capitulation. As we look at the VIX, we got to see a move in the VIX. And for this, we got to see, again, an indication that hedges are coming in. And for this, I look at the Keltner trend at 20-day, 2ATR Keltner channel. We got to see this. And right now it's standing at about 22. We got to see that push north of 22 on the VIX. The VIX 3M to VIX ratio, what do you got to see there? We got to see that this is dropping below 1. So I got to bring up my pairs ratio study to get a ratio of 3-month to 1-month VIX. Right now we're at 1.1. Again, the 3-month VIX is 10% higher. We want to see the 3-month VIX drop below the spot VIX. And finally, what else do we want to see? We want to see VIX backwardation. What does that mean? I got to see that this contract, the Jan contract, rises above, at minimum, the February contract. I got to see this curve going from upward sloping to downward sloping, at least in the first 2 contracts here. So what this tells us, we're not there yet. We probably want to see 90% of stocks in the New York Stock Exchange, with 90% of the volume being down, to show that the kitchen sink has arrived and sellers have arrived. We're seeing a degree of correlation that really marks short-term bottoms. And finally, you might want to see skew decline. Skew is still hitting, and this is basically an indication of the degree of hedging on the part of institutions, and we're still sitting at 167. We had a all-time high print at 180 back here on the 24th. Okay, with the VIX selling, people took advantage of it and they hedged. And again, the hedges are not coming off yet. So we'll see what today provides. Does skew start to come off? In the coming days, can we drop down here to 115 to 120? That is a normally positive range for the market to uncap the upside potential, and we're not there yet. So at least at this point, there's no Santa on horizon. There is no silver lining. This could be, and very likely will be, a year without Santa. And how do you think about that if you're a market bull? Okay, if we're going to call this a bull market, how do we think about that if Santa does not arrive? What does that pose in terms of January? We'll see how that comes. Again, I'm looking for strength in gold, energy, and strength in bonds as well. You may think that's antithetical, but we're looking at value. We're looking at a little bit of dollar, but again, strength in bonds does help gold and may help utilities as well. And again, those two together represent a more defensive rotation. But again, as always, we're going to look for confirmation. We have very specific things we look at to mark that. One of that is option activity, that kind of internal activity that may point to direction. And we'll see what that holds for next week's video as we start to get into the new year of 2025. Anyway, have a great